In this video, we will solve question number 117 from T.S.Grewal book. Revenue from operation. That is, sales, cash is given, credit is also given. Sales written is 1 lakh. Current asset 3 lakhs and current liability is 1 lakh. You need to find working capital turnover ratio. The formula to calculate working capital is current asset minus current liabilities. Current asset value is directly given. Take 3 lakhs. Current liability is 1 lakh. 3 lakhs minus 1 lakhs is 2 lakh. 2 lakh is the value of working capital. This is the formula for working capital turnover ratio. Revenue from operations divided by working capital. We found the value of working capital here. 2 lakh will come in the denominator. We need to find the value of revenue from operation now. So revenue from operation is equal to cash plus credit sales. Basically, total sales minus sales written as revenue from operations. So cash sales, it's given in question, 5 lakhs, credit sales 6 lakhs, sales written 1 lakh. 5 lakh plus 6 lakh minus 1 lakh is 10 lakhs. We got the value for revenue from operation also. So revenue from operation 10 lakhs divided by working capital 2 lakhs, which gives us 5 times. Next question number 118. Equity share capital 15 lakhs. Gross profit on revenue from operation is 33 1 by 3 percentage. Cost of revenue from operation, CRFO 20 lakhs, current asset 10 lakhs, current liabilities 2,50,000. You need to find working capital turnover ratio. So formula for working capital turnover ratio is RFO divided by working capital. We need RFO first. Working capital, to calculate working capital, we need current asset minus current liability, that is given directly. We need RFO now. But in question, they did not give the value of RFO. Instead, they have given cost of revenue from operation and gross profit is given. That too, it is mentioned as 33 1 by 3. We'll see how to calculate it now. See, whenever you see 33 1 by 3, it actually means 1 by 3. I'll tell you how. 33 1 by 3 percentage. This one is in mixed fraction. Make it into normal fraction. So 33 into 3 plus 1. 99 plus 1, which is 100 by 3. Percentage is mentioned, right? So for out of 100, it is 100 by 3, which actually means that it is 100 divided by 1. 100 by 3 multiplied with reciprocal. When this fraction moves to the other side, the sign changes, multiplied with 1 comes up. 1 by 100. 100 and 100 gets cancelled and the answer is 1 by 3. So when you see 33 1 by 3, it actually means 1 by 3. Now, you consider revenue from operation as 1 because you need to find RFO. In question, cost of RFO is given. Consider revenue from operation as 1. Then gross profit is given as 33 1 by 3. So as I told you, 33 1 by 3 percentage is 1 by 3. So 1, that is revenue from operation minus gross profit will give you cost of revenue from operations. 1 minus 1 by 3. 1 minus 1 by 3. So you need 3 in the denominator. 1 means it is 1 by 1 only. Multiplied with 3. Do the same thing in numerator also. 3 minus 1, 2. So 1 minus 1 by 3 is 2 by 3, which is actually cost of revenue from operation. Revenue from operation RFO minus gross profit is CRFO. Now, for 2 by third portion, this is cost of revenue from operation, right? For 2 by third, what amount of cost is given in question? 20 lakhs. Write the same thing. For 2 by 3, it is 20 lakhs. We need a value for 1 because we need revenue from operation. That is what we need to find. For 1, what will be the value? This x is actually RFO. You are going to find the value. Now cross multiply. 1 multiplied with 20 lakhs is equal to 2 by 3x. So 2 by 3x, the same way here also. 2 by 3x is equal to 20 lakhs. Now x is equal to 20 lakhs multiplied with 3 goes up divided by 2. 2 comes down. Finally, we got the value of revenue from operations. Working capital, current asset and current liability is given directly in the question. See, current asset, current liabilities. Current asset minus current liability is working capital. We'll get the answer for this one also. Now this equity share capital is additional information which is not required for this problem. So finally, revenue from operation, which is 30 lakhs divided by working capital is 7,50,000, which gives you 4 times. We'll see 119th problem from T.S.Grewal book. Capital employed is given at fixed assets, cost of goods sold. Gross profit is 20% on cost. Working capital turnover ratio, you need to find this. Working capital turnover ratio is equal to revenue from operations divided by working capital. Now, to calculate revenue from operations, the value is not given directly. They have mentioned about CRFO and GP. Gross profit is on cost, so there is no issue because cost is given directly, 40 lakhs. So out of this 40 lakhs, 40 into 20 by 100 if you do, we get gross profit. Our next formula is revenue from operation. To calculate revenue from operation, you need to add cost of revenue from operation plus gross profit. Cost of revenue from operation is given in question, 40 lakhs plus gross profit which you got now 8 lakhs. Now 48 lakhs is the total revenue from operations. Next we'll look into the question now. Capital employed is given, net fixed asset. These are the two values that are there, but we need current asset and current liability to calculate working capital. Value of current asset is not given, current liability is also not given. Rather, they have given information about capital employed and net fixed asset. Now use this formula. We all know that capital employed is equal to total asset minus current liabilities or total liabilities minus current liabilities. So capital employed plus current liabilities will be equal to net fixed asset plus current asset. So when you total these two, we get total liabilities, and when you add these two, we get total assets. This is total liabilities. Current capital employed is given, which is 12 lakhs plus we don't know the value of current liabilities. You keep it as such is equal to we know the value of net fixed asset, that is this is given in question, plus we don't know the value of current assets. We keep it as such. Now 12 lakh minus 8 lakh is equal to current asset minus current liability. We all know working capital is equal to current asset minus current liability. So the value of working capital is 12 lakh minus 8 lakh, which is 4 lakhs. See, current asset minus current liability. Instead of this, you substitute with working capital because working capital formula is current asset minus current liability. We got the value of working capital also. Now, revenue from operation 48 lakhs divided by working capital 4 lakh, which gives you 12 times. Problem number 120. You need to find working capital turnover ratio. Revenue from operation is given, current asset, total asset is there, non-current liabilities, and then shareholders funds. To calculate working capital turnover ratio, you need RFO divided by working capital. RFO is given directly. You need a value for working capital. So working capital is equal to current asset minus current liabilities. Only the value of current asset is given, current liability is not given. Okay, we'll see how to find this now. Total asset is equal to 10 lakhs. We all know total assets is equal to total liabilities. Now they have given information about liabilities. Non-current liabilities given, shareholders funds. So total liabilities will be equal to shareholders funds plus non-current liabilities plus current liabilities, because we know the value of total liabilities, because total liabilities is equal to total assets. So 10 lakh is equal to shareholders funds 2,50,000 plus non-current liabilities 5 lakh plus current liabilities. Now substitute the values. Total current liability 10 lakh, shareholders funds 2,50,000 plus non-current liabilities 5 lakh plus current liability you need to find. Now substituting the values, we get the value of current liability as 2,50,000. We know the value of current asset from the question minus current liability 2,50,000, which gives us the working capital. This is the value of working capital. Revenue from operation 15 lakhs. The value is given directly in question. This one you calculated now. The total value of working capital turnover ratio is 4 times. Let's see question number 121. Working capital turnover ratio should be found out. Gross profit is 25% on cost. Gross profit amount is given 5 lakhs. Equity share capital, reserves and surplus, long-term loan, fixed asset. Net fixed asset is 10 lakhs. They did not give the value of RFO directly. It's not given. They did not give the value of CRFO also. But information is given about gross profit. Gross profit is rupees 5 lakhs. And they have given another important information. Gross profit is 25% on cost. This is the most important thing. So you assume CRFO as 100. When CRFO is 100, gross profit will be 25% on the CRFO, that is cost. CRFO 100, then GP will be 25% on this, on 100. Now RFO will be, RFO is the total of CRFO plus GP. So RFO is equal to 125. In this question, they have given the value of GP. So you start from that itself. See, GP is 25. So for 25, what is the value? 5 lakh, which is the gross profit. Gross profit amount is 5 lakhs. Then what value will come for 125? Because we need revenue from operation in order to find working capital turnover ratio is equal to RFO by working capital, right? We need value for RFO. So you write 125 here and X. This X is RFO. When you cross multiply, we get 25 lakhs. 25 into X is equal to 5 lakh into 125. If you calculate this, we get 25 lakhs. Next, coming to the next portion. We got the value of RFO now. Next up, we need to find current asset and current liability, but both the values are not given directly. Instead, we need to check what formula we can use. Equity share capital plus reserves and surplus plus long-term loan plus current liability. This is total liabilities is equal to, total liabilities will be equal to total asset, fixed asset plus current asset. So in question, equity share capital value is given, reserves and surplus is given, long-term loan is also given, current liability is not given. So you keep current liability as such. which is equal to fixed asset value is given, but we don't know the value of current asset. You keep it as such. Now current asset minus current liability will be equal to, you equate this. Take this 10 lakhs other side. This will become turn subtraction. Symbol will turn into subtraction symbol. Now working capital is equal to, so why working capital? Current asset minus current liability is equal to working capital. So working capital is equal to 5 lakhs. We got the value of revenue from operation 25 lakhs and working capital is 5 lakhs. So the answer is 5 times. We'll see question number 122 now. A company earns gross profit of 25% on cost, and here is given gross profit amount is 5 lakhs, equity share capital 10 lakhs, reserves and surplus 2 lakhs, long-term loans 3 lakhs, non-current asset 10 lakhs. As it is given as 25% on cost, you assume cost of revenue from operation as 100, gross profit 25, and when you add CRFO plus GP, you get 125. The value of gross profit is given. So 25, for 25 it is 5 lakhs. So this is about gross profit. We need the value of revenue from operation, which is 125x. This x is RFO. Revenue from operation is 25 lakhs. Now, in the question, they have given details about equity share capital, reserves and surplus plus long-term loans plus current liability value is not given. So this is total liability. This is total asset. Total liability is equal to total asset. Substitute all the values. You don't know the value of current liability and current asset. Now, take this current asset or this current liability on the other side of the equation. We get 10 lakhs. So 10 lakhs is equal to current asset minus current liabilities. We all know the formula, current asset minus current liabilities, working capital, which is 5 lakhs. Now revenue from operation divided by working capital is 5 times. Question number 121 and 122 are one and the same. Only thing is they have given you year here.